It appears Bitcoin is currently retesting and potentially rejecting from the 20,500 resistance. A loss of 20,000 will result in a continuation toward the downside. Considering the current news in the markets and economy, this move is likely. We're here to discuss the probabilities of that move and what to look out for to pinpoint it. Let's go ahead and get into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day today. We're here to talk about Bitcoin on the small time frame, on the macro from a technical standpoint, economic standpoint, and of course, discuss some market data and traditional markets. Before we get into it, go ahead and smash your like button, click that comment button, leave a subscribe on the channel, guys. We do daily videos for Bitcoin. We talk about the market data, the technical data, and the price action alone, focusing only on the facts, no emotion, no bias. You can also find us on Telegram if you're interested in more content. Our Telegram channel is our second link down below. You'll get access to charts, news events, updates, all of our videos, educational posts, and so much more. If you're interested in trading signals, and if you're a trader, you can join us on the VIP channel for entries, targets, stop losses. Everything is detailed for you. As you can see, guys, a phenomenal trade here with over 300% profit. You can find more information in the pinned comments. You can find all the membership info and of course our trading track record here. You'll get access to our main trading channel and exclusive group chat. Let's go ahead and get into the video, starting off with the market data. Currently, Bitcoin is down 11.92% for the current month of March. We're 12 days in, so a little bit under halfway, guys, a little bit about 40% through, and we are seeing this month already be quite red. Now, this is something that was expected. Remember, we saw some bearish stuff print, guys, on the monthly. We saw a DOWJ candle print as a rejection candle from the 50 EMA on the monthly chart, which signified, especially after a large rally, it signifies indecision and reversal. This is a bearish candle printing right under the 50 EMA, which was a major trigger point for a macro uptrend reversal. We saw that print and we said, look guys, we're probably going to see March be red. We're going to see a red candle print, as that is what the candle was suggesting decreasing momentum, decreasing volume, decreasing liquidity, and indecision. All of these four bad things occurring right at resistance. Not only structural resistance, being that 25k resistance, which was a 264-day long resistance, but also, guys, it was a technical resistance. We had the 50 EMA, and of course, we had that 200 moving average and Gaussian channel resistance. So we did see a pullback for March, and we're most likely going to see this pullback last a little bit longer. Looking at volatility, we're 2.75 at the 30-day period, and of course 2.74, both of which are rising as the price is speeding up toward the downside. We are seeing 24-hour volume drop 37% over the weekend, and we are seeing liquidations drop 45%, still over $100 million, so still relatively high. As for liquidations in the last 24 hours, guys, we have seen mostly longs liquidate, but we have seen a decent amount of shorts liquidate as well. It's been a pretty tight spread. So let's go ahead and talk about broad markets. The DXY has bounced to 104, currently in an ascending channel formation. It is looking okay. It does have a big move coming this week. Again, really important position for the DXY to be in. The DXY continues downwards here. We're going to see some recovery in the markets. However, both the Dow Jones and the S&P are not in good positions. The Dow Jones reached our last bearish target of 32,000. If you remember, guys, we've been in a symmetrical triangle formation. The measured move from the symmetrical triangle formation was going to be from that point over here, 32,000. Okay, we took it from the top to bottom here. We took it from the top to breakdown, and last target 32,000. Measured move complete, target complete. If we do lose 32,000, guys, we will be looking at a target anywhere along this downtrending support line, so it could potentially drop down into the sub 30,000 level. Looking at the S&P 500, we reached our next bearish target, of course, 3,900 along this downward trending support. If we do see a continuation downwards, we could drop a significant amount more for the S&P 500. Of course, that is going to result in Bitcoin dropping too. This could go as low as 3,600 if we continue downwards, and the DXY is going to play a big role in that, guys. We have seen the bond yields absolutely nuke in the last couple days, again dropping that DXY down. So it's going to be very interesting this week to see how these markets open and to see the health of these markets when the market opens, specifically the strength of the dollar. Now, we have a lot more news coming out this month, guys. We have not seen yet CPI, we still have not seen FOMC, we still have not seen PPI. We have these 4 news events left. Unemployment and NFP came out. We got CPI, inflation year on year, PPI and FOMC decision all to come. All of these events can drastically shift the market conditions, massively shift the perceived risk in the market, and completely and utterly influence the asset prices going forward. Keep your eyes out. The 14th, 2 days, 15th, 3 days, and we've got the 23rd in 11 days for FOMC, which is a big one. Let's go ahead, guys, and talk about Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, guys, Bitcoin. As we said already, we saw a massive rejection from 25k. 25k being that significant, massive area of resistance, that 265-day resistance Bitcoin had to break above to see a macro uptrend develop. The reason why we're saying a macro uptrend would develop above that point is because from a technical standpoint, guys, we have got the 50 EMA, okay? We've got the 200 EMA, and we've got the Gaussian channel resistance all sitting at 25k. Not only from a structural standpoint and a technical standpoint, but from a horizontal standpoint, this is a 252-day resistance, 256-day resistance, whatever it is. It indicates a massive area of confluence, and a price action point of which we break above will result in a continuation toward the upside. However, as we were saying for weeks and weeks and weeks leading up to this point over here, specifically as we started reaching this point here, we were saying, okay guys, be worried. RSI is showing bearish divergence. Volume is dropping. Volatility is falling off. Liquidity is drying up. We're at resistance on the higher time frame structure. We're at resistance on the 200 to 50 EMA on the monthly and the weekly. The chance of a pullback is significantly higher. We are not going long here. In fact, we've been shorting ever since we've reached 24.6 and 25k. Our measured move target, guys, from here was, of course, a breakdown from that rising wedge, taking us to a maximum drop of 18,000 to 19,200, a major support range. This major support range spanned the date from June to November, 144 days, and also acted as resistance from that November point to the breakout point in early January, 64 days, a total date range of 208 days. This is a 208-day long volume range, a 208-day long support range, massive support and massive resistance flip. This massive area of resistance, which was now resistance over here, is now a massive area of support. This is going to be an incredibly important level to hold, and if we fail and drop below that level, we will be dropping low. We'll talk about it in a second. However, in the recent days, Bitcoin has lost the rising support level of our rising wedge. We have dropped to our first target of 21,500, 21,800. Ticked it off. First target done. We have dropped to our second target, 20,000 to 20,500. Ticked it off. Done. The question today is, are we bouncing from 20,500, or are we continuing to our next support? So before we answer that question, let's go ahead and discuss what would happen if we fall below this level and what would happen if we break above this level. Because right now, the only 2 points on the charts you need to really focus on are going to be, if we go ahead and draw it out really simply, is going to be that 25K level, okay, and that 18K level. These are the two major macro trigger points, okay? Macro trigger meaning the 2 price points on the chart that if we break above or below will determine the next few weeks or months of price action and shift the macro direction aggressively, okay? So let's go ahead and discuss those now. I'm gonna go ahead back over to this macro chart. A loss of that 18,000 level will result in a macro continuation downwards. How low could it take us? Well, we're looking at the VRPV and we're looking at the next chunk of major support. That is going to be sitting over here, 12,000 to 13,900. You can see this area here acted as major macro resistance for 1,000 days in 18 to 20, the years 2018 to 2020, it lasted as a resistance for 1,000 bloody days. A long resistance becomes a major support. If we lose the 18,000 level, guys, we are going to be at risk of retesting this major area of support for a bottom. That is a potential. Looking at what is happening here from a structural and technical standpoint, we've rejected from the 200 and we have rejected from the Gaussian channel. The last time on the monthly chart and weekly chart, we rejected from the Gaussian channel. It resulted in a pullback to equal lows. However, we were above the 200 moving average whilst that happened. Currently, we are below the 200 moving average while this happens. Therefore, the likelihood of a continuation lower is higher. There's a higher likelihood that if we reject and lose that 18,000 support, we will be losing the low and creating a new low. That is really significant. Let's talk about 25K. If we break over 25K on the monthly chart, we will be closing a monthly candle above the 200 moving average and a 50 moving average. Every single time, guys, we close a monthly candle above the 250 moving average, we never ever close a monthly candle below it again. You can see instance one over here, and again in this instance over here. We can see a monthly candle close above will result in an initiation of a uptrend in the higher time frames. What we're really looking for is the fact that a 25K break will facilitate a move to retest the yearly low of the prior bull market. In this instance, as other instances, is sitting at 30,000. A monthly candle above 30,000, such as this instance here, okay, such as this instance here, will result in the bull market initiating. It will result in the bull market initiation. So that is why 25K is so important, because it facilitates a retest of the yearly bull market low, where if we break above, we enter a new major strong macro uptrend that leads into a bull market. Let's go ahead and talk about the current price action. So currently we are obviously in this support resistance range, right? We're between 20,000 and 20,500. On the smaller time frame, however, we are retesting the resistance support area of that horizontal channel formation we developed very, very shortly between January 13th to January 20th, a 10-day period, okay? 7-day period. Currently, we have pushed up and we've retested this level. As you can see, this is our current downtrending structure. We do not anticipate any move toward the upside on the higher time frame unless this downtrending structure is broken, okay? Until then, we are in a downtrend. Any move toward the upside should be considered speculative and should be considered as an opportunity to look for shorts, okay guys? Once this downtrending structure breaks, then we can be looking at potential swings upwards to retest this 25K resistance or potential higher resistances. Until then, be cautious, okay? We are very much in a strong downtrend, as we'll show you in a second when we do our technical analysis. Looking at, looking at the chart right now, we have rejected and currently rejecting from this horizontal range. If we fail to get above 20,650, we will reject from this range, and that will facilitate the move toward the downside to 19,200 to 18,000, guys. That's 19,200 and 18,000 here. Okay, that will be our next move. Let's break it down. Let's go to a smaller time frame, a 1 hour chart. Let's look at the technicals. As you can see, guys, we have created a local lower high. This is our high point. This is our lower high. We have a downtrend. Very clear. On the RSI, we have created a double top. This is not quite a divergence, but it is signaling weakness in the trend. Not as weak as what you'd see on a divergence, but still it is not signaling strength. It is signaling drying up of liquidity, drying up of volume, drying up of momentum. It's signaling a degree of weakness we have to be aware of. Looking at the momentum, however, we are technically on the rise, right? This is a rising momentum. We see an uptrending momentum. Where does the momentum flip down? It will flip bearish once the uptrending line breaks. A break on the uptrending line will confirm a rejection here and likely continuation downwards. Remember, I'll say it again, only a break on this RSI will confirm the rejection from here that we currently are assuming is in fact a rejection and is confirmed. Once that occurs, our next lower targets are going to be expected at around the POC at this volume range at 20,100 to 20,000. We can draw a little box on over here. That will be our next target. A loss of that range will result in a potential break of this uptrend, which will trigger the move to 19,200. So looking at the chart over here, look at the hourly RSI. Hourly RSI breakdown, okay, confirm rejection, moving down to 19,200, moving down to 20,100 to 20,000. A loss of this uptrending support line breaks this structure and confirms deviation of this whole range. The whole range deviates and rejects, we move to 19,200. Until then, we can potentially see a small rally toward the upside. That rally breaks over 20,650 and we clear the current structure or current local high we had, which was again at 20,700, and of course acting as resistance at this range all the way back in January 2023. We will be moving back toward the upside, right? We will be deviating below, this will be deviation, and we'll be moving back upwards, potentially developing a trend back to test this resistance. Again, we'll be talking about that tomorrow if it does happen. Until now, we're just taking a look at the short term. So keep your eyes on both scenarios. Both scenarios are very, very relevant. For the upside move, again, what could trigger the upside move? We're looking at this RSI, guys. If we do break over this local high on RSI, we could potentially see a swing upwards, as that's going to be a current resistance, and that will be a shift positive. So that's shifting from uptrend to positive strength. Okay, we're having more strength in RSI, which could facilitate a rally back toward the upside. Very important to keep your eye on. We do obviously have a neckline resistance here, so a break over 20,700 will result in quite a strong move towards the upside. And again, those prior targets we're talking about, so 20,100, 22,000 will be our targets for the rally towards the upside. Let's go ahead and do a technical analysis, guys, on the higher time frames. Starting off on the daily chart, we'll take a look at the RSI again and some moving average and momentum indicators. As we can see on the day chart, we have entered that oversold territory below 30 on RSI. We have pushed back above it, so we've entered from oversold now back into histogram range. The market cipher B does signify that obviously we are basically at the bottom over here in terms of bearish momentum. We're very, very aggressively down. We are still moving down and we are still bearish in that momentum. We still have not seen a shift from strong negative to weakening negative momentum. We are down. That will occur if we do break it back above 20,600. Looking at the 12-hour chart, guys, we can see on the 12-hour chart we have printed a green dot. That signifies a shift from strong negative momentum to weakening negative momentum. This is going to be the first signal or first potential sign of a reversal developing at the current resistance or support range. This is something to keep your eyes on. We'll be watching this over the next couple of days. In particular, with that short-term chart, we will assume that a break above this level and a close above this level will result in a continuation upward, okay? Moving to a 3-day chart here, guys, we can see it is not looking very good. That bearish divergence, in fact, on the RSI did in fact play out very, very well. We saw that break toward the downside, okay? Not looking very good on the 3-day chart. And of course, as we go to higher time frames, it's going to look worse and worse. So we've just had that bearish crossover here on the market side of B, signifying momentum is now shifting toward the downside. We're seeing strengthening negative momentum or weakening positive momentum occur, okay? This is what we're seeing. So it's not looking very good on the higher time frames. Of course, we've got a double top, but we are at support now. So support should be considered support until it's not. And that is why we're saying on the smaller time frame, again, on this smaller time frame, when we look at the smaller time frame, wherever it's gone, we do have to assume this area, this horizontal area, is going to be acting as a resistance, and therefore a drop could take us back down. But we have to also remember the range of which we are in is between 20,000 to 20,500, right? This whole area is higher time frame support, and therefore even if we reject from this level, we do not expect a downtrend to resume unless we lose that 20k level, which lines up with this uptrending support line. So ideally, we could see something like that, right? We could see something like that. So right now, expecting a bounce on the higher time frames, on the smaller time frames, expecting a pullback to retest 20k and its uptrending support before we see that next move up, or if we lose that next move down. Right now, we are in this intermediary phase. We're in this decision-making phase. We're kind of developing a price structure, developing price action before that next move will resume. We can't say for sure what it's going to be, especially with the DXY close, the traditional markets close. A lot is going to happen this week. Be very much attentive. So, summary of everything really quickly. Higher time frames, we're looking bearish. Daily chart, we're potentially decreasing our bearish momentum here. We're at support. We're looking for a break above the support range to facilitate a move back towards the upside to retest 21.5k to 22,000. Even at a retest of 21.5k to 22,000, that will not give us enough strength to break above the macro downtrend. This is this downtrending trend line. Therefore, we will still be in a downtrend. So unless this downtrending breaks, this downtrending trend line breaks, we are going to be expecting downtrends, and every rally upwards should be shorted downwards, okay? If the downtrending trend line breaks, we will have developed a new structure which will facilitate a rally back to 25k, although very unlikely considering the monthly and the weekly charts are very, very bearish right now, okay? The short time frame, if we lose $20,000 again, we expect that continuation to occur to 18,000 to 19,200. I think I have summarized everything, guys. I hope you enjoyed today's video. I'm very tired today. I didn't get a lot of sleep, so bear with me. My voice seems a little bit quiet or tired. You can find us on the Crypto Academy courses at gmail.com. If you're interested in learning how to trade, you've got a 10-unit course over here. We teach you everything in market structures, candlesticks, technical indicators, risk analysis, risk management, and of course, finding your own trades. Contact us over here on the email for more information. With that being said, thanks for listening, and I'll catch you guys tomorrow. Cheers.